Hey everyone, Economic Analyst here. In this video, I'm going to go over the recent Consumer Price Index report and go over the top line numbers as well as delve into the details as what's been contributing to consumer prices in recent months. So for July, the Consumer Price Index report came out right on schedule as I predicted, flat month over month change at 0.0%. So if you've been watching my videos, when I produced the Producer Price Index report video for June of this past year, I indicated that based off of the fuel prices coming down and based off of final demand numbers that we were going to be looking at 0.0% monthly change, which would bring the annual change of inflation down to 8.5%. That's precisely what we saw. And so just to recap on how I was able to do this is that I've added this fuel component into the final demand model, realizing that dropping fuel prices will be more readily engaged into consumer prices a whole lot quicker than through the natural production chain process, where producer goods must first go through that process before finally spilling out into consumer goods. Since I've been doing this, the model, I believe, has become a whole lot more accurate and predictive of inflation and given us a better idea at where things are going. So annually speaking, it's changed by 8.5%. And this has obviously, caused a whole new fresh set of calls from analysts saying perhaps this is peak inflation here. Yet when we strip out the energy prices, we find that the annual price inflation did not drop. It actually slightly climbed, and that on a month-over-month change, price inflation did drop from its rate of growth in June 2022 down to 0.4%, but this was enough to still cause the annual rate to stay high at about 6.6%. Again, that's stripping out these energy prices. The major contributor to the drop in these energy prices has been the gas prices, and we can see here over time the gas prices were dropping steadily in the month of July after peaking in June, and they've continued that trend into August, so more than likely we will see another weak CPI number, possibly even a slightly negative number, depending on how low gas prices go. The reason why I think this is going on is because the United States has been selling off the strategic petroleum oil reserve. So the Biden administration, ever since Joe Biden has come into office in January of 2021, has sold over 25% of the U.S.'s strategic oil reserves from the moment that he came into office, and he is scheduled to sell off over 40% by the end of October in an attempt to mitigate these rising gas prices that the U.S. had been experiencing ever since they bottomed out at the end of 2020. So because of that, I think that's the major driver that's dropping these gas prices, which is artificially deflating this CPI. And when we strip that out, we're seeing that the consumer price index is staying and remaining elevated here. When we strip out energy prices, just like we did with the rest of the aggregate CPI, we'd really have to go back to the 1980s to see the CPI as high of a level as it is right now. Looking at the table breakdown, note that food prices jumped by another whopping 1.1% as the United States is feeling the effects of money and debt growth, especially impacting the volatile food prices. Year over year, food prices are up by still over 10%. When we strip out food and energy and look at what is called core inflation is still elevated at 6%. The major component there is obviously shelter prices, which is now comprised of 40%, over 40% of that core inflation, and it's up by 5.7% year over year. The monthly change of that was 0.5. That was something else that I predicted back in 2021, and I've updated on this, is that there's been a strong correlation, which is obvious, between the Case-Shiller Home Price Index annual inflation rates and their effects on shelter inflation. So just to recap, back in the 1980s, the United States Bureau of Labor Statistics decided to change the methodology in the CPI and not count housing prices directly in the price of shelter inflation. Instead, they used a component called owner's equivalent rent, or a survey of homeowners of what they would charge rent if they rented out their homes, and has trended that. Long story short, there's a delayed effect which causes a rising inflation rate between the housing price and the shelter component price for owner's equivalent rent. Because of that delayed effect, inflation rates are going to stay higher for longer, but they may not necessarily escalate and peak as high as they would under the old methodology. In either case, we're still seeing these effects on inflation, but in the aggregate, they're being masked by the drop in fuel prices. So moving forward, when we see August's numbers come out, I'm expecting another weak inflation month for August, and I'll be able to confirm that when final demand numbers come out. So we could even see a contraction, a monthly contraction, though right now I'm just going to say it's going to be flat right now. But if we do see a flat month-over-month growth in the CPI, that's going to drop the annual line CPI numbers down to 8.1%. Needless to say, because of this, the stock market was very euphoric. Investors were surging in, buying stocks on this. I'll probably produce a video that talks more about that detail in coming days. I've got a lot of work that I've been doing on with other videos that I've been going on, and obviously the next video I'm going to produce is when we get the producer price index report numbers. I believe they come out tomorrow, but if for some reason they don't come out early next week, then I'll produce other videos. But if we do get that tomorrow, which is what I'm expecting, I'll be able to give you more of the details of what to expect in the forward inflation number. So, just to recap, gas prices hiding the real inflation rate that's going on. Yet in the long run, because we are seeing a stagnating growth in money, because money growth has been slowing down ever since 2022 really started here, and really the money growth rate has dropped to about 5 to 6% year over year, and it's pretty much been flat year to date. This is beginning to have its effect on the inflation numbers, combined with an increase in increase in releasing more oil supplies from the U.S. government in the Strategic Oil Petroleum Reserve. It'll be very interesting to watch what happens to oil prices when that releasing selling off initiative happens, and if the Biden administration decides to repurchase and buy back some of the oil that they are selling to restock that reserve. It'll be that'll be something to notice in coming months. So basically, the way that I have it is that we're going to see another weak CPI number in August, and then slowly building up CPI numbers again through the rest of the year, as we still have to flush out a lot of excess money and debt in the system. And with the wake of the recent government spending policies that have come through Congress, I'm becoming more bullish again on inflation staying higher for longer. So my outlook right now is that we're probably going to see inflation probably between 7 and 8% by the end of this year, depending on just how much of an effect, a deflationary effect, the Strategic Oil Petroleum Reserve has on energy prices. Guys, as always, I thank you for watching this video. Again, expect the second part of this to come out tomorrow, when we get the producer price index reports and the final demand. That'll give us a better look at where things are headed. But so far, good news is that my new revision to the model and incorporating the fuel prices is certainly holding up. Once again, I thank you for watching this video. If you like the content that I provide, make sure that you show me some support. Like this video, subscribe to my channel if you haven't already, click the notification bell so you're notified whenever I do upload a video. And as always, drop me a comment and let me know what you think about all of this. I'd appreciate your input as you've spent the time to listen to mine. Once again, guys, I thank you for watching this video, and I'll talk to you next time.